Hello, everyone. Welcome to the third episode of Bank on Digital, webinar and podcast series we dedicate to digital banking and empowering bankers all around the world to think different, connect, and hear some inspiring and motivating stories from our speakers. The podcast series is sponsored by Lowgate and started by Lowgate, the company where I work at. We've had experience implementing our CRM solution and our contact center solutions in banks all around Europe. And we kind of gained a lot of experiences in this process, of digital transformation in these banks. And these digital transformation projects are no small feat. We can see there are multiple challenges, and usually technology is the minor part of it in the end. In this discussion today, we will uncover what happens really in banks when the digital transformation projects start, how to handle them in a good way, but also discuss some other things that our speaker has to bring to the table. Today with me, I have Simon Hayhurst. He is the founder of Hayhurst Consultancy, and he has experience working in the banking sector as a banker himself, leading some of these digital transformation projects, but also as an external consultant now who's helping banks, fintechs, and non-banking actors really get into the industry and get some really good feedback from the market, help them with the marketing strategy, communication strategy, and so on. So without further ado, welcome, Simon. It's great to have you here
Thank you
today.
very much. Yeah, delighted to be here and flattered to be asked. Thank you for inviting me on the program.
Of course, I'm sure that we can learn a lot from your years of experience and all the way from those early starts when the digital transformation was just like a term that no one knew what it meant, all the way to now.
Yeah, I've been working in financial services for 30 years, hence the hairline. I started work in a bank in 1986, in the earliest days of telephone banking, way pre-internet, where digital transformation, it wasn't a phrase, it wasn't even a thing. And I've worked for banks, building societies, insurance companies. I've worked in financial services, marketing agencies, and I've seen an awful lot of very big projects come and go. I was involved with Lloyds Bank's first ever foray into internet banking, which is called Evolve, which no one will remember, and also Lloyds Bank's major foray into wealth management with a whole massive project called Create, which again disappeared without trace a couple of years after it was launched. Um, I've been involved with Lloyds Bank's first ever single sign-on project on internet banking with one of their insurance partners. Um, and the last 5 years, I've been working in market research, and most of my clients are either financial services or technology providers. And what absolutely fascinates me, because I've worked in FS for nearly 30 years, is where those two streams intersect, where tech and fin meet. I do a lot of research for my clients in those areas, and I find it absolutely fascinating.
Yes, and we will dig deep in a second when it comes to that. But let me just ask you, like, you work with all these big banks for them, actually, and consulting groups as well. What made you start your own consultancy? What was it that you saw that you could bring that is unique to the market that not a lot of people are doing or thinking about?
Um, Yeah, I had a career in marketing, which I'd really enjoyed. And because my father worked for NatWest for 40 years, it seems to be like financial services. It's just something in my genes. But as I got more and more experience, I learned more and more about not just the marketing side, but how technology impacts and enables and sometimes disrupts how marketing works. Having worked in market research with tech and FS clients, I got to the point where actually I'd rather just position myself as someone who's available for FS companies to say, look, Simon, we need to find out X. Can you go away and find it out for us? Come back when you found the answer. And I love being given those kind of briefs. So whether it's qualitative or quantitative or desk research, being paid to find out interesting things, because I'm a bit of a geek, is a lovely thing to be paid to do. And I love working for myself and I love working with my clients. And one of the joys of working for yourself is I don't have a sales manager looking over my shoulder saying, how many sales calls have you made? How many projects have you completed? I mean, I leave my wife to do that. But yeah, I love working for myself, and I love working with my clients, and I genuinely enjoy what I do. I've no more hair to lose, basically. No more hair to lose.
I see. But one of the things is like some people may call this like an old-fashioned model, just to help the audience understand some of your methodologies. And by the way, if you have any questions at any point, please feel free to ask them in the chat. And hi, Tommy, I see your message. So if at any point you have some questions, make sure to write them down and we'll address them at the end of the session. Yes, as I was saying, some of your methodologies may seem old-fashioned to some people. As you explained, sometimes you call people, like the customers of the banks, and you ask them, like, why are you buying their products? Why are you using their products? Or sometimes you will ask the competitors, like in their customers, like, okay, why are you using the products of this bank? What do they do right? What are they doing right? What are they doing wrong? Um, would you say what does it help you? What kind of data do you get that normally you wouldn't get through, like some internet surveys or other things? Like what does it help you uncover?
One of the weaknesses of internet surveys is that what my clients want me to do is speak to CFOs, CTOs, CMOs, CEOs, and they don't click on internet surveys and complete them. You actually have to make the effort to get in touch with these people with a degree of credibility and persuade them to spend a little bit of time telling you, as an independent researcher, what some of the challenges are about the business they run and some of the solutions they're looking for, and also to understand where their incumbent providers, solution providers, aren't doing a great job. And so one of the threads of research that my clients ask me to do is to understand or help them understand where their competition are failing. Because right now, many people to believe we're in the midst of a recession. Many markets are stagnant or even contracting. And if you have an organization, you're looking to grow it in a contracting market, you can't wait for the market to grow and you'll just ride the wave. You're going to have to take business off your competitors. So one of the things I could arrange to do is to speak to your competitors' clients and get their net promoter score from them. So that's a very simple question on a scale of 0 to 10. How likely or unlikely are you to recommend your current service provider to your colleagues and peers? And then I understand why they get that number. And so what that means is that when a client of mine is in a pitch situation against an incumbent, if they know that that incumbent is strong at A and B, but weak on X and Y and Z, they can talk to the weakness of the incumbent. So they might go in as a tech consultancy and say, we understand your current service provider is very, very good at managing cloud migration, but actually very poor at legacy system integration. Now, actually, that's what we're really strong at. And so you guide the conversation to what you are strong at and what the competition are weak at. And if you're trying to sell your services into people in the contracting market, knowing where your competition are weak is a really powerful thing to do. So that's the kind of thing I do. And because I've got no hair and I've been working in financial services for 30 years, when I speak to a chief exec or a CTO, I can do it reasonably knowledgeably and credibly. And because I'm a market researcher by trade, they know that I'm not going to pass their name on to the clients I'm speaking to. They're not going to get a sales call off the back of it, but the information they do give me will help the market give them a better service opportunity than maybe the one they're not enjoying currently. So that's a particular type of research I do for a lot of clients right now.
I understand. And how do those clients of yours, how do they respond to those findings? Like, do they make any changes? Because I know that there's a lot of research being done out there, and even like you have like some free access nowadays to like the trends and things like that. But then like a lot of the CMOs, will just look at it and be like, yeah, and that's it. We don't do anything about it. It's like in the strategy or something like that. Do you ever see that strategy being implemented actually, and those findings that you presented to them
Yeah, I
utilized?
mean, yes, I do, and it's gratifying when it happens. It depends on the client. Fintechs are of their nature very nimble. They don't have legacy operating systems, don't have a legacy compliance culture, whereas the big banks, insurers have that in spades, really. And so they find it much harder to move nimbly. The interesting thing, they don't always want to be nimble. I remember years back when I first started working on Lloyds Banking Group, and a senior manager there said, we don't ever want to be first to market in anything. We will let the market make its own mistakes, and then we will stand back and learn from their mistakes and only adopt the processes that actually the mid market of the customer want. Once we've learned from everyone else's mistakes, we then want to be best in market. That's our ambition, but not to be first. So with a big group like that, you don't always expect them to. They need to know what the trends are. They need to know what customers are moving towards. They need to know what the market is moving the customer towards, but they don't always want to innovate, but they do want to know. The fintechs have nothing to lose. They've got their seed capital. They've got this great idea. They need to move fast and break things.
Yep.
And so if I can give a fintech an insight about where a technology is suboptimal for what the market needs or might need in the future, then they'll move very, very quickly to implement because they're set up to move quickly. So it depends on the client, really.
Yeah, and we talked a little bit yesterday in the preparations for this call about the incumbents versus the fintechs, and you told me like a really good example, which I would ask you to share with everyone, of your daughter, how like she researched about one of the neobanks and who's backing them, and then she decided to go with
Yeah.
an incumbent in the end. What
Well,
would
this
you
is it.
say? Yeah, we talked a little bit about this in the past webinars, for example, but I know a lot of people say, yes, there are a lot of fintechs entering the market, there are a lot of neobanks entering the market, but they do not have the credibility and trust that the incumbents have. And maybe that's what they should be banking on more.
Yeah, it's difficult for fintechs. An organisation like Barclays or Lloyds or NatWest have been around for centuries, really, and therefore they have a great amount of embedded trust in the minds of consumers because they have been around for so long. That comes with some big legacy issues that pop up in some quite unexpected areas. Um, so, for example, years ago, when a customer opened an account with Lloyds Bank, if it was a joint account, the bank manager was told not to ask for the date of birth of the woman because
Mm.
that was an indelicate question to ask. So when they wrote down the date of birth of the applicants for the joint account, the system was programmed to assume the woman's date of birth was exactly 2 years after the gentleman's. Now, in the 1960s, 1970s, that was not an issue really for anyone
Yeah.
until direct marketing and digital transformation and database marketing come along, and that customer is 50, 60 years old, and the bank want to use that date of birth to market to them. So perhaps we worked on a mail pack for Lloyds Bank where they're trying to sell personal loans to people approaching their 50th birthday, saying, why don't you go on a cruise? It's a lovely birthday. We'll lend money for cruises. And then someone in the database department said, actually, we've got 30-year-old data here, and it's horribly inaccurate. And if you write to women saying, we know you're about to hit your 50th birthday, do you want to go on a cruise? We're going to get a lot of complaints, right? Fintechs do not have those problems because their data is not that old and their systems aren't that old.
Yep.
So there's a big difference between fintechs and banks in terms of perception. However, that's a double-edged sword. So the example we were talking about, my daughter's 24, travels a lot around Europe, wanted a card on which she could store currency, use it in any country. And I won't name the brand, it's a pretty well-known brand. But she just had a little pause for thought in terms of, they've got my money. and their banking license is in the Baltic countries. And if they go bust with my money, there's nothing I can do to get that money back. And just before she went traveling, she decided actually she wasn't going to use that card and she was going to use an equivalent by her regular UK bank. The rates on the card were much worse, 1% worse.
Yeah.
But that trust element, that longevity, that actually, you know what? I mean, why aren't the major UK banks, European banks, into crypto? It's because they see it's a complete and utter Wild West and they don't want to be associated with it. Once the FTX shitstorm settles down, they may well look at it, but they are never going to be first to market with those kind of initiatives because it's way too risky and they are risk averse, not just in terms of from a regulatory perspective, but from a brand perspective as
Brand
well.
perspective. Yeah.
They're fine being seen as a little bit dusty, as they're as they're reliable because that's their point of difference. They can never be as nimble as a fintech, so they never want to try.
Yeah, and I mean the question your daughter asked, like, do I get my money back if this bank just goes bankrupt, right? Like, that is a legitimate question to ask today because of all the examples you just mentioned right now. And do you think that the banks are doing well enough in that in terms of the advertising? Are they present enough, so to say, like the incumbents? Are they present enough with their, as you said, it like old-fashioned advertising techniques that they still use, or like I think you mentioned like Lloyds or Barclays. I'm not sure which one of those two was. Was it that they're never changing their advertising strategy? It's always gonna stay the same. Do you think that
Uh,
it's still visible enough?
yeah, I worked for one of Lloyds Bank's advertising agencies many years ago, and at the time we were using galloping black horses to raise awareness of, sorry, not awareness, familiarity with Lloyds as a banking brand. 25 years on, they're still running very similar style ads because they want to be seen as having longevity because they know they can't compete with the fintechs in terms of being novel. And therefore, their positioning is very much about you remember us from your childhood, you can see us today, we will be around another 40 years. Yeah, sure, stick your money with FTX, but that's not who we are and not who we want to try to be. And so they position themselves as possibly a little bit staid, but the banks see that as a virtue in financial services. If you want a long-term relationship with a customer, which they all do, you actually want customers who are not price sensitive. You want customers who are relatively, they'll say loyal, but actually inert. And this is something we're going to talk about, I think, because there's a big danger with digital transformation projects that you disrupt inertia. A lot of the digital transformation projects I've seen are designed to strip out cost and make the organization operationally more efficient. And the start point is with the operational systems, not with what the customer wants to do. And far too many times, and we'll all have this experience, you phone your bank, you phone your insurance company, and it's press one for a mortgage, press two for a loan, press three, da,
Yeah.
da, 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 da. And you'll go through all these tiers of IVR to get a message saying, you can find out all the information you need on our website. Simply go to www. The reason most people phone a call center is because they can't find what they need on the
Yeah.
website. And that's an example where banks and insurance companies are trying to force customers down a route they do not want to go. And that creates grit. Grit creates disruption. Disruption creates disloyalty. And so when we're looking at digital transformation programs, we really have to examine very closely, are we disrupting the customer's habit? Let's call it habits. So it's halfway between loyalty and
Yeah.
inertia. Let's just call it habit. Are we disrupting customers' habits for the customer's benefit or for ours? Because if
Exactly.
it's for ours, the danger is the customer will say, actually, you know what? I don't want to do this. I want to do things my way. I'm going to leave. Sample size of one, but we were talking the other day. This happened to me very recently. For 15 years, I had a credit card with a company called John Lewis, big UK retailer. fine, absolutely fine. I spent thousands of pounds on it. I always paid it off. In their view, I would have been a very, very loyal customer. About 8 months ago, their credit card management was transferred from HSBC, who did all the back office work, to a company called New Day. And that meant that I, as a cardholder, had to sign a new credit agreement so I could transfer the obligations that I have and they have from HSBC to New Day, who's the new provider. I'm sure that the database people at John Lewis would have looked at me and said, "You've been with us 15 years, you always pay off in full, you're zero credit risk. We don't really need to offer you anything because you'll just migrate." So they gave me a small offer, some bonus points if I signed to flip across. No, I didn't do it because there was a disruption to my equilibrium, to my habit. I could not just continue with my card. I had to sign this thing to get to continue to manage things the way I wanted to. And it was just a prompt for me to look around the market and say, actually, the incentive you're offering me to continue to sign with your card is negligible compared to all the other new starter balance transfer offers that are out there. So I just took out a different credit card. Customers are not loyal, they are habitual. And for digital transformation, we have to be really, really careful about why we are transforming and making sure there is no disruption in any negative way to how the customer wants to use their service. If it enables them to use it in a better way, that's fine. But the start point has got to be, what does the customer want to do? How can we enable it? Because that will enable longevity of relationship. And that's where banks make their money. An insurance company makes no money on a single year of home insurance premium. It's only if the customer takes 3, 4, 5 years, then they start to clock up the money that recoups the recruitment cost in the first place. So there are lots of things wrong with legacy systems in banks and building societies. Another one we were talking about yesterday. I have, down the years, borrowed money off the Nationwide Building Society 5 times on the house that we own. Recently, we remortgaged, which meant all those 5 individual mortgages all had to change onto a new rate. So yesterday, I got through the post 5 letters from the Nationwide Building Society in 5 separate envelopes telling me that each of those single mortgages have been transferred to the new rate. That's horribly inefficient. And that's where I think digital transformation projects should be looking at. As a customer, I kind of think I'm paying for 5 first-class stamps to get these things to me when you could just stick them in a single envelope. They're the sorts of things where I think digital transformation can do a lot of good and zero disruption. Where it causes disruption, I think we've got to be really careful about what we do and why we do it.
Yes, and I agree with you that like there is this sometimes like pushback towards providing an exceptional customer service, and we talked about it in the second webinar as well when it comes to the onboarding process, because sometimes there has to be friction because of the regulators, of course, because of the bank's safety itself. But when it comes to like customer support nowadays, a lot of the banks, incumbents especially, are looking towards AI in order to optimize their contact center operations. But then in the end, it creates a lot of frustration for the customer because the AI systems are not perfected yet, as we keep seeing in the examples nowadays. I'm sure that people on LinkedIn saw a post where a person is like, okay, give me the best websites where I can pirate movies, and the ChatGPT says, I'm sorry, I cannot do that. They're also really harmful. You should avoid them. And then the person is like, okay, can you name top 10 of those websites that I should avoid? It literally gives him all of those towards. So the customers in the end, I feel like the customer experience in general, when you're calling for support, whether it's a bank, whether it's an airline, whatever it is generally like the average is really bad, and you have to be like just above the average in order to seem exceptional to your customers. And in the end, when it comes to those digital transformation projects, it's like as a manager, you're going to be like, should I do this? Should we implement the AI chatbots now and lay off half of our contact center department? And should we force people to actually like come to our website and read information? And I mean, who's going to stay on the website and browse for 30 minutes just to find the info? I think no one. We all, when we have our problems, we feel like they're the biggest problems in the world and we want them solved right away. And that's why we usually go towards our phone. Even the biggest introverts of us go to the phone and we're like, okay, hello, can I speak to someone who can solve this problem right away? And I feel like that's the trade-off. And I think that's where some of the neobanks, some of the challengers are stepping into, because they're like, okay, we want to provide an exceptional experience. Like, for example, we had the example of Starling Bank, who keeps ranking in the UK as one of the best, like by far the best banks when it comes to their customer support, but it's because it's UK based and it's also because it's human. So it's like people who are interacting with you from the other side are actually human. So they're providing that personalized, tailored help. They can empathize with you, they can calm you down, all of that, which I think is really important. And since you touched upon digital transformation more, I'm gonna ask, because as you said, you worked on the first website, on the first internet banking project for Lloyds. Back then, that was considered a disruption. Right now, we're talking about AI systems. We're talking about advanced. We're talking about metaverse, all of that. How do you think that has changed over the course of years? And do you think that digital transformation has become a continuing process, that you no longer can say, okay, we implemented the system and now we're done? Or there are still some of those cases where it's still like a one-time project and we did it and now we moved on?
It's definitely not a once and done. Certainly, if you are migrating from on-prem into cloud, and once you get into the cloud, hey, we've done that. But you do that, you migrate to the cloud for a reason, and that's to enable you to do all sorts of things that you couldn't do on-prem. So no, digital transformation is a journey, not a destination, as they say. It creates opportunities to do lots and lots of more interesting things. It's interesting you talk about the metaverse. There was an article in Private Banking International magazine. It's only 7 or 8 months ago, and it was saying to the chief execs of private banks, you need to embrace, sorry, your clients are waiting for you to embrace the metaverse. This is the way forward for private banking client services. And you need to get on board with this very, very quickly, otherwise you'll lose business. 6 months later, Facebook, who rebranded to Meta, are suddenly pivoting away from the metaverse and are pivoting towards AI, because they've suddenly seen that actually they've hyped up the metaverse as a delivery system, when in fact all the other big techs are pivoting towards AI as the root of their future solution delivery. I'm sorry, but private banks don't need to embrace the metaverse. Private banking clients don't want to wear digital headsets to engage with their private banking manager. That's not to say they are tech averse, because the means through which we are interacting today via Zoom or a Zoom equivalent, that's how I deal with my financial advisor. He didn't need to come to my house. I didn't need to go to his office. And we use technology to converse in a human way, where we can see each other and he can hold up charts and what have you. So it doesn't mean technology has no role, but it's got to be technology that the customer wants to use, rather than technology that the FS provider wants to impose. I'll give you another example. I'm as well as a Starling business account customer, my personal account is in the UK with First Direct, the original UK telephone bank. I'm evangelical about them, and I've been with them for about 25 years. When COVID hit, they had a big problem because they're a call center based bank, and they really struggled with not allowing their call center operators to come into work. They were having to work from home. They weren't equipped to make work. So what they tried to do was push their telephone banking customers onto the First Direct app. And they would have probably said, actually, you know what, this is going to save us a fortune because we use this to change customers into habitually using an app on their phone rather than phoning to speak to us. We can save a lot of money. The big challenge that brought about for them from a marketing perspective is that First Direct's point of difference is when you phone them, you don't have to press 1 for mortgage or 2 for loan or 3 for insurance. The person who answers the phone is trained and equipped and has fantastic systems in front of them to empower them to deal with whatever it is you want them to deal with. Virtually no other bank can do that, which is why First Direct's customers tend to be very, very loyal and evangelical about them. Every bank's got a banking app. And so First Direct pushing customers towards using a banking app whilst saving them money in the short term and getting around an operational difficulty actually means that the First Direct customers think, well, actually, you've got an app. Everyone else has got an app.
Yeah.
I'm happy with app-based banking. I don't really need to use First Direct. If someone else gives me a switching incentive, I can change over in 3 minutes
and the fees are lower with
the. So you've got to be really careful that you throw with digital transformation, you throw out the baby with the bathwater. If your customers are happy, don't try and make them unhappy. Make them happier. Exactly. But the start point has got to be, what does the customer want to do? And that doesn't mean there aren't massive opportunities for cost saving through digital transformation, but you've just got to be careful about how they impact, whether they impact on the consumer. We were talking about one yesterday in the prep about barriers to digital transformation. One interesting thing I've seen really interesting in financial services is the shift in the role of compliance teams as barriers to transformation, to enablers of transformation. The chief thing that brought this about that I've seen was with GDPR. Historically, compliance teams did not like the idea of a customer's data going off-prem. They actually wanted to be able to walk into a locked server room, put their arms around the server and know that none of that data would leave the building. And so from a risk perspective, there was no data risk to data egress because the data was housed on-prem and they could secure it and see it and switch off the server if they absolutely had to. The moment you take the data out of the building into the cloud, all of a sudden compliance teams got very, no, hang on, we can't put our arms around the data. How secure is this cloud? Why are we doing this? Nope, can't, shan't, won't happen. The change happened when GDPR came in, because GDPR said for someone like me, who is a data subject, who might have a bank account and a credit card and an insurance policy and a mortgage with the same organization, legacy banks and insurance companies have lots of servers on lots of premises, on lots of product systems.
Yeah.
And for me as a data subject to say to that insurance company, right, I want you to show me all the data you hold on me. And then I want you to delete all the data you're not legally obliged to hold on me. And I want you to evidence that you've done it. And under GDPR, I can ask for that. And the insurance company or the bank or whoever has to comply. If you've got servers in 6 different locations on 6 different systems, it's actually very difficult for a large financial company to actually evidence that they are compliant with GDPR because they don't actually know where the data is.
Yeah.
Once you've migrated your data to the cloud, it's not easy, but it's easier to have a single customer view, to be GDPR compliant and say, right, we can see a single line of data for you as an individual, and we have to hold these bits, but these bits we can delete, and with a single click of the button, we've deleted the data, and here's a certificate telling you we're compliant. And suddenly compliance teams were very much in favor of cloud migration if it meant that they could be more likely to be fully compliant with GDPR. Exactly. Because compliance teams are risk averse, and it's just a case of where does the risk actually sit. So that's an example of a digital transformation project, which is a massive benefit to the business. That's interesting for the IT people to work on, that the compliance stakeholders can be fully supportive of. Even at board level, we need to invest money in this because there's a risk if we don't do it, then we're not going to be compliant. And the risk averse boards will listen to that kind of argument. From a customer's perspective, it's maybe a little bit better. Yeah, if I now if I ask them what information do you hold, they can tell me pretty quickly. But it doesn't disrupt my relationship with the bank if the back office is rationalized in that way. So there's lots and lots of opportunity still for digital transformation in lots of different ways that empower businesses to save a lot of money, so long as they're not disrupting the customer. I've lost you. Have you lost me? Am I talking to myself? It won't be the first time. We've lost Jovan then, have we? Just me. Okay, what I'm going to do is I'm going to have okay, that's great. Thank David. I'm going to have a little look at the comments and just see if there's any questions. So we've got a question from Tommy who's asking, do most FS banking industry companies prefer on-premise solutions? There still are major insurance providers who have on-prem. In fact, a company I used to work for, who are in actually quite a dynamic part of the insurance world, still have their data on-prem. And again, it's a legacy issue for them. They only have one, so they have two servers, but on the same premise. So it's not as if they have servers distributed around the country. So the issue that we were talking about with cloud migration and helping have a single line of customer visibility isn't really an issue for them. But yeah, I think increasingly as compliance teams are. Jovan's back.
Hi guys. I apologize. We had a bit of an internet situation here, but it's okay. I see you're answering the question, right?
Yeah. So yeah, I think that there's a legacy preference for on-premise, but increasingly people are seeing that the value of going into the cloud, and once you get your stakeholders on board with the value that can create, there's a lot of opportunities still to do it. But as I say, it makes life simpler, but it does not make life simple. Again, you have all sorts of decisions to make. Are you going to lift and shift inefficient processes and put them into the cloud and then fix them? Or are you going to try and fix inefficient systems that, yeah, generate 5 letters and 5 envelopes? Are you going to fix those systems before you go to the cloud? So the cloud is quite a pure solution. Or are you going to have some kind of hybrid solution where you lift your insurance database first and then you move mortgage and then you move loan or what have you? It depends on the complexity of the requirement. Let me put it this way. I don't see anyone going from cloud back to on-prem. The traffic is only going one way.
Yeah. Yeah, and what would you say is usually the biggest obstacle to cloud migration, not just the cloud migration, but any digital transformation project done in the bank? Because we talked yesterday a little bit about the stakeholder alignment. How can you achieve that? Because usually it has to come from the top, right? Like the leadership has to be supportive of it. But how do you get?
Where I've seen projects fail is a lack of stakeholder management at the outset. I did some research for a company called Netcall. It's public domain, so it's not under NDA, so I can talk about it. Where I did research amongst people who spec a customer journey, usually the marketing people who have to build the customer journey, that's the IT people, and people who have to operationalize it from a customer service perspective, who are the operations team. And Netcall had this hypothesis that those three teams want different things and they pull in different directions. And unless everyone's aligned at the outset, then you're not going to get an optimal solution. And actually, the hypothesis wasn't proven. The people who work in operations and IT and marketing actually all want to build a good journey. They want customers to be happy. They want the business to save money and make money. They want fewer complaints. They want more sales. The stakeholders are actually unified in purpose, provided that they're all involved at the outset. And quite often the challenge will be that the marketing team will want to do something and try and push it through because it's for the customer, without any real reference to how the operations customer service team are actually going to have to manage that process, or how IT are going to have to build it. And they might, marketing teams have got in customer experience experts to design something without reference to the platforms that these systems are going to have to sit on. And an IT director who finds out that marketing are investing money with process consultants without talking to the IT director first are on hiding to nothing, because that just puts up political barriers. So, yeah, from what I've seen, stakeholder management at the outset, getting everyone on board and aligned with what the opportunity is, makes things run much better. And if you get that sign off at board and then work down, that is much, much better than one department trying to change something for their benefit without really telling anyone else what it is they're up to. But that happens a lot, I'm afraid, happens an awful lot.
Yeah, it does. We've seen it as well as we implemented our CRM and our contact center solutions. It happens all the time where one side wants something, the other side wants the same thing, right? But in a different way, because they all have like these silos views towards the project.
Yeah. I work for a big insurance company who decided to offshore their customer call center. And the operations team decided that in isolation without telling the marketing team, the client service team, because the client service team worked with on a white label basis with a lot of retail clients for whom we provided insurance services. Our biggest client had an agreement with their unions that they would never offshore their customer service. And as we were a provider to them in our contract with them, there was a line in the contract that said we would never offshore our customer service. So when the board of our company said, "Oh, we're going to make a strategic decision, we're going to offshore customer service," when the client service team found out about it, said we can't actually do that contractually. So yeah, if you start these initiatives without getting the rest of the business involved, all sorts of things can come and bite you on the backside. Stakeholder management at the outset is absolutely key to success.
Yeah, thank you for that. And I think we'll have to wrap up soon. So I have one more question for you. And
sure.
if anyone has any other questions, I think we have time to address one more maybe. So make sure to write them in the chat. My question for you is, since we talked quite a bit about what you've done so far, what is it actually you do with the Hayhurst Consultancy? Could you sum up what do you actually offer and how can people reach out to you?
Okay. Basically, I help business. I uncover insights that help businesses drive powerful marketing strategies. And because my background is in financial services and marketing and technology and research, I'm quite unusual in that in the market research marketplace, I can see things from a client's perspective, from a technology service provider's perspective, and from a marketeer's perspective, and from a customer perspective. And if you want to conduct research into what your customers want and how they want it best delivered, if you want to conduct research into where your competitors are weak and they're not serving their own clients well and creating sales opportunity for your organization, I'd like to think there aren't many researchers out there with my blend of expertise who can find the answers that you need. Yeah, it's gone very well for me so far, but always room for one more client on top.
Yes, and I would say that Simon is quite active on LinkedIn, so you can reach out to him via LinkedIn, and we'll also link to his website, so you can find it in the YouTube description, on Spotify, and also on our blog post. So in case you want to reach out to him, you can always do so. He's, as I said, quite active on LinkedIn, and I'm sure you'll enjoy some of his insights there in his posts.
Simon Hayhurst, Hayhurst. I'm also Simon_Hayhurst on Twitter.
Thank you so much, everyone. Please tune in next week, not next week, sorry, in 2 weeks when we'll have the next webinar. You can follow us on LinkedIn, Bank on Digital. Until then, we'll publish all the updates, and please subscribe so you can always get those updates first. We will send the follow-up to everyone who attended and those people who wanted to attend but couldn't. So yeah, we'll see you in the next episode of Bank on Digital in just 2 weeks. Bye, and thank you so much.
Thank you, everyone.
Thank you, Simon.
Really enjoyed it. Really enjoyed it. Thank you very much.
Me too. Thank you so much, Simon.